And we just a quick shout out to two new speakers that just joined the stage. We've got the Wolf of All Streets and we've got Richard Hart both joining. Guys, how are you?
Doing good, doing good.
Doing good.
How are you feeling, Richard, after the latest after Gemini's lending platform today?
Well,
Another I told you so.
just yesterday, Simon said, you don't see the Winklevise acting like that. And I said, oh, yeah, how about those Winklevise? I know people that can't get their money off Gemini. Oh,
I didn't
Richard
say
Hart,
that,
right
Richard.
again.
I didn't say that. Go back to the recording. But hey, Richard, credit to you. I have been trolled like absolute crazy. You have a serious community. But I didn't say anything about Winklevie. That must have been someone else.
My bad. I thought that was you. Sorry, man. Yeah, somebody was like, yo, the Winklevie don't act like that. I'm like, really? They play in a rock band, dude. Like, and by the way, if you're an exchange and you don't add Monero to your exchange, you're a scumbag. You know privacy is a human right. You know you can't operate a capitalist business without privacy. You know that when you go to spend your crypto, someone gets to see your entire bank balance history forever and eternity, unless you use a mixer or something that's anonymous. So any exchange out there that doesn't have Monero or some other anonymous thing plugged into their exchange, you're what's wrong with the world.
I'll give the mic to Wolf of Wall Street. Man, I've been watching your videos before the whole saga started, so I didn't have time to start watching YouTube anymore. I've been here. But what's your thoughts on everything happening? How deep do you think it will go, and how much uglier can the domino effect get?
I think there's no end to how ugly the domino effect can get. Unfortunately, I mean, obviously, everyone's mentioned Genesis here, which is powering the Gemini yield product, and Gemini obviously viewed as one of the most reputable regulated exchanges. And at this point, I think it'd be better to rip the Band-Aid off and just see, obviously, where this contagion ends. The faster it happens, the better, so that we can start to, I guess, recalibrate and rebuild. I wanted to go back to what someone was just saying, actually, about the yield, and make it very clear when talking about yield, these centralized finance platforms, and listen, probably half the people here, like myself, are creditors of Voyager or Celsius. They were shadow hedge funds that were masquerading as consumer banks, right? That has nothing to do with the yield that's in proof of stake or the yield of Ethereum if you're staking in the contract. These were literally guys that were basically a prop trading fund who were doing shady things to earn yield and then pass a percentage off to their customers. And I don't think that was necessarily with malintent from the beginning. I mean, I've talked about this quite a few times. I think there was a point where there was free money in the GBTC trade for institutions like BlockFi, and they were able to pass on these massive yields. But the repercussion of that is that they accumulated quite a huge client base and customer base, and those customers were going to leave if they weren't able to give that sustainable yield in the future. So when GBTC went from obviously a premium to a discount, and then the cash and carry trade tried to go away, and then Anchor Protocol died, all of these ways that they were quote unquote safely or predictably getting yield died, because in any market, when there's an inefficiency that somebody can take advantage of, eventually it's arbitraged away, right? It doesn't exist forever. But their problem then is that they have millions of customers, and they know that if they drop their yields to 1%, they're going to lose all their customers. So they went further down the risk curve to try to find that yield until everything exploded. So, I think that it was largely a poor business model that got them trapped, and then everything exploded down the road, but definitely not the same as the yields that are offered in proof of stake. But as for what comes next, it's hard to predict.
Fun fact, man. I've got a yield generating product that's been in business for 3 years. It's perfect flawless operation. And the price went up 10,000x. And it's only down 95%, while everything else is down 75 and 85.
So really
I've been quiet about it, but like, nobody talked about it.
From the Bahamas. The Bahamas office of the Prime Minister says the Bahamas did not have sole oversight of FTX's worldwide operation, have given directions that proceedings and investigations are to be of the highest order. Office of Bahamas Prime Minister says, based on understanding of the FTX crisis to date, we have not identified any deficiencies in our regulatory framework that could have avoided this.
Everybody's going to punt the ball to someone else, right? You can see how fast people are running away from any responsibility for anything. I don't think that that's unexpected.
Well, let's just be honest.
I think this is going to be another thing. Oh, sorry, Ken.
Let's just be honest. I think we are all on the same page when we say that Russia did this.
I think this is going to be another thing, which is transparency of organizational charts and what entities does what. So one of the things we had to do in our terms and conditions was actually publish which entity the shares are with, which entity operates the platform. And so I think this is going to be another thing. You would expect that as traditional due diligence if you were investing into a company, but now I think we're getting at the level of ultra transparency where organizational charts and what the entities do is going to be in the terms and conditions. And I suggest this would be one for people would be very curious about with Binance as well.
Here's a question for you. Why doesn't this take 10 years like Gox did?
So that was in the Japanese court, and then it went into bankruptcy, and then it came out of bankruptcy because the dollar value of Bitcoin put it into a new process called civil rehabilitation, which was then subject to all of the legal disputes where every time you were about to pay out clients, some dickhead that said, I created Mt. Gox US and you owe me $15 billion could hold up the whole process.
Yeah, so I guess if you don't resolve it before Bitcoin's next pump in 3 or 4 years, then you get that same problem.
Yeah, they're in Chapter 11, and I'd expect it to go to, if there's criminality, it would go to Chapter 7. And there's not many assets to liquidate like Mt. Gox because all of the Bitcoin's been hacked probably. So I'd expect it to probably be a 2-year process rather than the whole Mt. Gox thing.
And a 2-year process where you're effectively saying that people get nothing in the end.
Well, it all depends upon what Alameda did with the assets. So they may have invested in a bunch of private equity, and they may have just been, Solana-based companies and NFTs and things like that. So if that's all marked to zero, then the value's gone. I talked about it earlier, but I'll repeat it here. The key issue that I think is going to come up in this one is that essentially client funds were used by Alameda. And Alameda really, the creditors in Alameda are probably going to be hedge funds and sophisticated financial institutions. And the creditors in FTX are going to be retail plus all the sophisticated financial institutions. So it depends whether those hedge funds have more exposure on the Alameda side versus the FTX.com side. So what I think is going to happen is bankruptcy proceeding is more likely to favor unsecured creditors if and only if you can demonstrate that actually the hedge funds were using the proceeds of crime because client money was not meant to be used. Now, here's the key difference with Celsius. They just simply didn't have, they illegally operated a hedge fund and a fractional reserve bank. And because they illegally did that, the ambiguity of Celsius claiming, so Kirkland and Ellis, the legal team, claimed that all deposits were actually the property of Celsius. And they changed the terms and conditions to reflect the fact that the previous CEO was essentially playing hedge fund manager and VC with client money. With the difference here is that because it was actually a regulated institution in Bahamas, that means that regulations define client money legally, and therefore client money was actually used. And therefore, if client money was used, you could argue that the hedge funds in Alameda were the beneficiaries when they took out their loans or collateral of the proceeds of crime, which then would be the unsecured creditors in FTX.com, which would be more retail. So I think this is going to be hedge funds versus retail. And I think we need to ensure that the depositors and creditors at the FTX.com side are the ones that win the argument. And I think, not a lawyer, but I think the proceeds of crime would be the defense there.
Richard, I think
I'm more
right.
concerned.
It's going to take a while.
I'm more concerned with so if you resolve all of these bankruptcies and you distribute what's left amongst the creditors, they're not guaranteed to sell. It's not 100% sell. But we've got some other big coin amounts out there that I'm pretty sure are 100% sell. So when the Department of Justice seized $1 billion worth of Bitcoin from the Silk Road hacker last week, that's a sell. They're going to sell that. They're not going to sit on that. That's a guaranteed sell. So I don't know how many billions, and then I don't know whether they're going to give the Finex hackers, the other Finex hacker, the Silk Road hacker was the one earlier this week. The FinX hacker was maybe 6 months ago, and they got, I don't know, what, 100,000 coins? I don't even remember what the number was.
Yeah,
so
it was
a couple billion.
119,000 Bitcoin, and then I think there was only probably 100,000 or something retrieved.
Yeah, so there's
the Mt. Gox
150K.
one was 200,000 Bitcoin of 800 because Mark Capellas found a private key under his mattress.
Yeah, I think Gox has got 140 left, 140K, and then you told me that FinX is at 100, and then this guy they just got was like 52K. So that's like what, 270 or something?
Yeah, and then Celsius essentially invested all the Bitcoin in a Bitcoin mining operation, and then they're left with about 30% of it, and a bunch of it was in WBTC, which interestingly they sent over to FTX, which may be subject to a preference, because I think they tried to get the WBTC into BTC. I got to remind myself of that. It was quite a while ago.
Right.
And then there's the Voyager ones as well.
I'm trying to figure out how much actual market sells are going to happen. So all these bankruptcies, those aren't market sells, but the DOJ is going to be a market sell or an auction at least.
Yeah, so the Silk Road ones were auctioned off to VCs. The Japanese civil rehabilitation, they did actually market sell and cause a crash, which was just dumb. They got rid of all the Bitcoin Cash because that happened halfway through they only got rid of some of it. They're still sitting on. Yeah, they sold equal amounts to the BTC and the BCH. Yeah.
So they're still sitting on 120,000 BCH as well.
Yeah. So Richard, unfortunately, we do have these centralizing effects. So in the case of the Bitfinex hack recovery, those Bitcoins are actually the property of those that had the recovery right token, which was part of the recovery plan we did in 2016.
I know that everyone wants that to be the case, but I heard the DOJ is trying to just jack them. I heard they've been filing paperwork to just steal them for themselves.
Well, there you go. There's a case there, but then it's also the Leo token holders, which was a result of the Tether crypto capital hole.
Yeah.
So those are I guess entitled to them by, let's say, token promise or smart contract, but then there's a legal process because the DOJ actually has them.
Yeah.
And then all of these. So the big when everyone's doing their technical analysis right now, unfortunately you can't ignore the fundamentals. That there's these big pockets, and if it goes into Chapter 7 liquidation, my belief is that it would probably be. Well, it depends. If they want to be a bad actor, the DOJ could do a market sale. If they want to be a good actor, depends how many people.
I think they usually have a U.S. Marshal auction.
Yeah, it depends how many people in the DOJ own Bitcoin. Then they might do an auction. But if it goes into Chapter 11, then you can get a payment in kind, plus an auction process. So where securities could also be issued, because there's exemptions in the bankruptcy code where rather than having to be a public company and be limited to the Jobs Act, which is 2,000 investors, you could actually issue these shares, which is what we're fighting for in the Celsius case at the moment, because essentially Alex just went out and played VC. Invested in a bunch of private equity mining companies, self-custody companies.
He did some FOMO tarting as well.
Yeah,
he did straight up.
The interesting thing, if we get this outcome right, we could end up with a really. So think about this. So you've got at the moment you've got the VCs, but if the retail win these cases and we get to distribute all of these shares and assets to 5 million people, we could end up redistributing and decentralizing the equity in many of these companies. That might be a really interesting turn of events.
I got a good one for you. Here's a fun thought experiment. GPTC is like half off of spot BTC. Ready for this one? Roll up the trust, liquidate it, and sell all the coins. I think they've got 350,000 Bitcoin, 320,000, something like that.
They had 100 million.
Yeah, no, GBTC. Again, nothing surprises me now, but I'm pretty sure that was, operating fully segregated, and it wouldn't be mixed in with if you had a segregated crypto lending company. I don't think you could come after
but
the
like,
backing of a trust. And there's a trust structure. So
yeah, but look at the math this way, okay? Right now, the market price for your entire GPTC enterprise is worth literally half of its assets. So in a I don't know whether leveraged buyout is the right word or whether hostile takeover is the right word, but anyone could arbitrage that difference by giving them a 20% bonus on what the market's currently giving them. So like this is what Elon did with Twitter. So you offer the GBTC guys a 20% bonus over what the market is currently offering, which is half off of their book value. And then you give them the money, you get the coins, and then you dump the coins in market and make the difference.
yes,
It
in
seems
theory,
like straight up normal economics.
Yeah, if any of those go into the Chapter 11 process, you could use the auction to do a community LBO and execute something like that. These are all the. I know that we're thinking about tragedy right now, but the free market solutions that can come from this, rather than having the government bailout, I think there's a lot of, that's definitely an interesting idea that in theory could actually happen.
Well, I want to know what the likelihood is of their coins dumping. Like so basically normal Bitcoin cycle, 85% dump. No one ever believes it when it comes, but it comes every 4 years. And now I'm just wondering how much extra downside there might be above and beyond 85 due to this hidden leverage, hidden FOMO-tards getting liquidated, the cost of the dollar going up for once in 20 years, things like that.
It's basically from here, it's an industry lobbying effort. The institution is going to be, if all of these companies go into Chapter 11, then you essentially have, Chapter 11 is a protection process to protect them from lawsuits. And then you have the DOJ that engages the US trustee. And the US trustee, if they think there's too much criminality or it's not moving in the right direction, then they can compulsory take over. That's very rare that would happen. But essentially, the end decision of this is the investment banks that these companies engage in order to go through the bidding process, who ends up buying those companies, and whether we can actually distribute the assets to creditors rather than a predator coming along and buying up the whole industry, or the US trustee just saying, right, we want to have a big systemic effect on this industry, which would be harmful to creditors, and then they could take it into Chapter 7 and try and liquidate, market, sell. Those are threats to the short term.
Simon and Richard, I have a big question, because I think this is important also. I mean, there's two things here. The first one is, ideally what you would like to see is everybody pulling out of all of the exchanges just to stress test them and shit test them. And then those who are still alive mean that they already are working okay. And then learn the lesson of history saying, okay, I'm going to treat the market like a whore, in and out when I want to trade, but my big treasury, I'll keep it on my keys. It's my keys, so I keep it outside. Ideally, that's the way I see things.
I think you permanently replace all the centralized crap with DeFi.
Yeah,
you can bridge Bitcoin to Ethereum.
Here's the point that I'm trying to make. Is like there's 2 points here. The first one is, if you do that, and then you do that on the traditional market, then it would be a catastrophe. Whereas in the crypto market, you could still survive theoretically. So that's the big risk I think the regulators are looking at, because if people are saying, okay, pull your money out of the exchange, but then by the same token, pun intended, you should also pull your money out of the banks, then everybody's toast, right?
Hey, Kim, can I just make one point there? So the reason why I don't think this is a good idea to be promoting is because...
Let me finish. The thing is, the problem with that also, and why it's not a good idea, is because if you start removing the liquidity from the pools, if you start removing the liquidity from those staking things, you will know that subsequently you will have another token drop, because those pools have tokens as well. Let's imagine everybody pulls their money out of Uniswaps or all the pools. The Uni tokens are going to tank, and then people are going to lose a lot of money, and then it will just unfold a domino effect onto the entire bloody ecosystem. So
That's not how
I
it
don't know if
works.
that's what you wanted
The
to
uni
say,
token
but
has no relationship to actual uni trading. It was a duct taped on crap coin that has no relation to the actual project at all. The uni
yeah, but
token
like I
is,
mean, when you get the yield from the transactions, obviously, if you don't,
yeah, but the yield goes up the less people that are participating in the pool. So it's self-balancing. So the less people are competing you as liquidity providers, the higher yield that you'll earn
all
because you'll
right,
be
yeah,
sharing the fees across a smaller pool of people. What you have to
right.
understand is
Are
that
you just
exchanges
slowly
serve
explaining
very
a
few.
swap to him? Is that what just happened in slow motion? You just explained a swap to him?
No, I'm
No,
explaining that
it's the yield from the protocol as well, though.
liquidity providers split the revenue of swaps in a pair, and they split it by their portion of total LP. And it's more advanced in Uniswap v3, where you can choose to participate in certain ranges and not other ranges. Uniswap v2 did not offer that. You had to provide full liquidity across all ranges, whereas Uniswap v3 is theoretically more capital efficient because you can centralize it in more reasonable ranges and not have to provide liquidity in the middle of nowhere where everyone touches it. So what I'm saying is an ideal like everyone pull their LP from Uniswap isn't as compelling as you might think, because it would counterbalance your effort to defund the LP with increased yield, because the fees are 0.3%. Well, you can choose, but they're usually 0.3%, unless you're on a stablecoin pair, which is 0.1%. So on those 0.3% pairs, if there's $100 million of volume a day, the fees per day is $100 million times 0.3%, and that gets spread across the LPs in that range. And so if you try to get people to pull their LP, it's going to...
Like, thanks
Yep.
for explaining that, because it's important, right? I mean, there's things I don't know, but I
Yep.
have a question. And in this case, like, wouldn't it be the case that if the yield all of a sudden reaches something like 10% on a spread, people will not be incentivized to trade anymore, and the entire thing will die off?
No, the spreads never change. So in
Okay.
Uniswap, the spreads never change. So basically your spread is the fee, which is funny. So it's not a traditional CLOB central limit order book. It's a constant product automated market maker, but it's not really
But
constant
then it will
product
be a
anymore
differential
because
between the different pools. Like if you have a ETH Tether, right, and then you have a big Tether pool, you have a
well, I
you
can
have
tell
a
you that
somewhat
I can tell you the day before yesterday, the largest traded volume USDC to Ethereum in the world was Uniswap. And if the world would just stop trying to use exchanges, they would find that you have thicker order books, better order execution, lower fees. So if you go on an exchange, okay, they're going to charge you 0.5% to do trades very
and they
often.
can front run, whereas Uniswap it's mathematical. Yeah.
And they can spoof and do a lot of other stuff.
Yeah,
So
yeah.
now look, you can say they can do minor extracted value, but like I'm telling you as a person that's pretty much expert on Uniswap, made it popular, carried it on my back, that Uniswap is a far better solution for your trading and has far more coins available to you, and you can place limit orders on it, and you can use 1inch.io if you're not in the United States, or you can use matcha.xyz, and it will spread your orders across all the available liquidity, and you can place limit orders, and you can place trades without gas fees. Like you can literally just like have someone else pay the gas fee. You'll end up
the
paying
question,
it.
Richard, is if everybody pulls out their money from the exchanges, and
That would be better for everyone in the world.
except
the margin trading degenerate scum who lose all their money. And it would be great if the only function these centralized entities play is to rob you of your privacy, rob you of your when they leak their database to everyone, or go bankrupt and give your data to the government, or answer subpoenas that the government gives them that are fishing expeditions, or the insiders that work there give away your selfies to everyone. Even Binance was hacked for $50 million. These people are the enemy.
But when you look at the market makers and the pools, right? If you have a disbalanced pool, let's say you have a pool of ETH and a pool of Tether, and the pool of Tether is much bigger than the pool of ETH, but yet
Sure.
for some reason all of the Tether holders want to get out because let's say things are unfolding badly, right? And then how you get to liquidate the pool of Tether versus ETH in this case without damaging the kind of like the ecosystem itself,
Well, it all auto balances. The price just moves. So, for instance, the person that emptied the FTX accounts, who's labeled in Etherscan as the FTX account drainer, That guy just yesterday or the day before market bought $50 million of Ethereum that used to be USDC. Now, probably he didn't want to have USDC come in and validate his coins real quick. So he probably wanted to get out of that counterparty risk and get into Ethereum, which has less counterparty risk. And it worked fine for him. So unless any of you on the call have 50 million in your pocket that you don't want to just market buy at once, he did it like across 8 transactions, about 10,000 Ethereum each, some that were smaller. If it's good enough for the FTX account drainer, isn't it good enough for everyone else on the call, guys? It's great. No counterparty risk.
Rich, I have a question for Richard. What about the 97%? I have a question for Richard. What about the 97% of tokens that are scams on Uniswap? Is that a great idea for the world? Is that the great idea to shift the world to DeFi, literally like alienated probably 30 to 40% of the world? I'm just wondering, because this sounds like a very tribalistic approach.
Yeah, what I do is I try to not promote scams. So I don't talk about or promote things like Celsius or BlockFi or FTX or margin trading. And so I'm a good person that doesn't victimize my users. I save my users. And I also realize the solution to saving my users isn't censorship. And it's not making it so there's a centralized party that chooses who's allowed to make a coin and who's not. So in order for capitalism to work, you must allow competition. And then you have trusted parties, people that are considered experts that decide, hey, look, maybe you don't want to get into this coin that shows red flags everywhere with admin keys, and you can buy it, but you can never sell it. And the front end isn't decentralized. And the front end also tries to steal all your keys and give you to authorize your ETH for spending. And then a proxy changes the contract and empties all your ETH out of your account. There's a million ways to lose all your money in crypto, but people still promote the heck out of it. I'll tell you, people lost more money.
But the point Alex is making, though, is that Uniswap, as a non-centralized entity, there's no centralized party to prevent.
It's the Wild West, Mario. It's literally like Total Recall. It's the future. I agree with 100%, Rich. It is the future. But right now, it's the Wild West. And literally, I know degens who've been in this game forever, and they're still getting spoofed. They're still ended up clicking on a link, which is literally Binance with an extra dot or a Binance.io instead of .com, and they get literally spoofed. So what about the average Joe who's not tech savvy?
Let's do a comparison real quick. FTT was listed everywhere. Scam. Yams was listed everywhere. Sushi was listed everywhere, and then the dev exit scammed, but then magically they came back. Okay. Hex is listed nowhere. So Hex, the thing that works perfectly flawlessly for 3 years and was given away for free and went up 1,000,000%, it's listed fucking nowhere. But the scams are listed everywhere, including the front page of CNC, where Hex isn't. So I can tell you for a fact the things that would have saved everyone are hidden from them, and the scams that robbed them are shoved down their throat and on sports jerseys. So you'll see, if you go to eToro.com, right at the top, 67% of users lose money with us. The top of the site. And then you see their banners and all the sports players running around. Hey, look, all our users are getting scammed. But we're allowed to advertise. But real DeFi, right? Not allowed to advertise. Banned. Can't advertise it. The world is not fair. It's a disgusting, horrible place. And the only way to solve that is for the people that were right to be listened to and the people that were wrong to be ignored and punished and censured. And I see a lot of people that used to promote, for instance, Gemini. Gemini promoted a fucking scam. They promoted the thing that just stopped letting you get your money. They should eat shit for that. Period.
I'm with you, Rich.
I'm with you.
I'm with you. And maybe it is unfair that people don't list Hex. But what I'm saying is on the centralized exchanges, these are not scams. They could simply be failures, right? There's no exchange. If you go to Coinbase, never you'll see 97% of tokens scams. They're failures, obviously. Even if
you go to FTX, you go to the projects listed on FTX versus any 10 random projects on Uniswap versus 10 random projects on FTX. Uniswap is much more likely to have a scam project there because there's no one vetting the project.
Guys, pro tip, there's no way for noobs to even know what's listed there, okay? Someone has to feed the noobs to the meat grinder. The noobs are being fed to the meat grinder, not by Uniswap, the technology, not by Uniswap, the website, by scumbag shilling and by coin ranking sites. Scumbag coin ranking sites like CoinGecko and CoinMarketCap are where the noobs get fed to these scams. That's where the noobs get introduced.
I agree with Richard on that. I mean, in the end, that's the job of the market to decide, and by trial and error to purge every now and then. But
Go to uniswap.org and tell me what new listings
but
are.
it's also
Impossible.
the job. It's also the job of the market to distinguish between centralized and decentralized, and there is onboarding and offboarding. And Richard is totally right that people should understand, but people will progress through a user experience as you offboard from fiat, and if you get wrecked with these experiences,
there's only one thing it can do.
But you can't get rid of centralized. It will exist, and
you can.
People,
you can get rid of it. But you can make it fucking illegal.
You have to make it illegal, and then you're using government enforcement and removal of you're using the philosophy you're fighting in order to enforce your map of the world.
Is it healthy for people to go 100x, bro? And you can't 100x in DeFi. You can't, but you can in centralized trash.
Yeah, but there's a difference between this is like the difference between communism and capitalism, right? You're saying you shouldn't do this and therefore it should be illegal versus
I'm not saying we got to make it illegal, but it should be on everyone's tongues like it's been mine for 5 years. Yeah. I've been singing the same song for 5 years with no changes.
Yeah, you should be doing what you're doing, which is shouting as loud as possible for people to try and follow your philosophy.
Yeah, get out. Get out. Do not trade. Get out of centralized exchanges. The only thing DeFi can't solve is the fiat on-ramp crap and the margin trading with extra insane, stupid leverage because you have to over-collateralize in DeFi.
Yeah, and the case of like a stock market having to go through additional rules and regulations in order
to... that just crossed the wires here. Market maker B2C2 offers to buy loans from Genesis's crypto lending unit. We also have just a couple things from the Bank of England Governor Bailey. He says he does not detect a systemic fallout in the United Kingdom from the FTX collapse. And said for 4 years, he has said there is no intrinsic value in unbacked crypto. But the big thing also to here being B2C2 is now offering to buy loans from Genesis crypto lending unit.
Sorry,
there's no value. Sorry, I missed that.
If I could just share one last thing. When it comes to comparing CeFi and DeFi, it is not true that Uniswap is superior to all centralized exchanges when it comes to execution technology. High-frequency trading can trade 1/64 millionth a second in terms of trading. So the technology is definitely not there in terms of the trading speed and promising and getting the right quotes in terms of slippage and spread. So that is false information. But I just really want to make sure that, we're speaking from a point of love, guys. We're already fucking hurting. Everyone has lost their money. We're not here to be divided. We're here to be united. We're not here to be egotistical. We're here to be altruistic and inclusive. And I think it's really important that in these times, we should not be divided, guys. We should just all love each other, even though we understand the differences. But
I think we need to push back on it.
No.
To Richard's point, the reason people are wrecked and hurting right now are because a lot of these CeFi lenders and exchanges basically trying to skew the actual playing field by promising yield that they can't actually generate. Whereas Richard's point,
listen to how stupid what he just said was, okay? What normal human being needs to trade in a 64 millionth of a second? Absolutely none. So he just talked about a feature that's useless to absolutely no one on the planet except someone that's wrecking retail, right? And then explains it like it's better. It's not better, okay? Go to whatever exchange you're trading on. You go to whatever. Listen, I'm pretty sure I've traded more than you, okay, buddy? Go to whatever exchange that you trade on right now, and you go type a market sell for $1 million of Ethereum.
Let's compare in real time, Richard. Go find your decks. I'll find my execution.
Sure.
Let's compare
I'm going to 1inch.io. I'm going to 1inch.io.
But to Richard's point, I think the thing is, you can already do that type of trading with other assets. The reason that crypto was launched in the first place was to be a decentralized or permissionless system that's an alternative to the financial banking system. So I agree with Richard. Like, you can already trade other assets.
Don't stop the dick swinging. I want to hear that. I'm sorry. I'm going to interrupt. There was dick swinging going on, and it's a perfect time for some funnery. Richard, continue. Who are you vying against? I want to hear the volume. Go.
So I'm just saying, look, we're talking about technology. I'm talking about order slippage. This is math. This is facts. It's got nothing to do with PPs.
No,
if you go to right now, 1inch.io.
1inch.io, which is hilarious. You just said people, but no, I want to hear. I want to hear. I was promoting this. Go.
Yeah, I'm on the website, bro. I'm typing numbers. Give me a second. Okay, so I can turn 1,000 ETH into, let's go with USDC here. My slippage on turning 1,000 ETH into USDC gets me $1.2 million. It's 0.11% slip, 0.1% slip. So I can turn 1,000 ETH into 1.198826 USDC right now. Now you go to your exchange and tell me what you get for 1,000 ETH order execution. Or we'll go 10,000 ETH.
I'm going to make a video for you, Rich. I'm going to make a video for you so we can post it online and we can take this offline. Yeah.
So I'm telling you, for 10,000 ETH market buy right now on 1inch, I'm getting 11,932,000, just updated, 11,933,675 USDC. That's 0.58% slippage, including all the fees, including all the slippage, all the fees, everything. As a normal user on a normal exchange, you get 0.5%, not even including the slippage, not even including the bid-ask spread. It's the thickest order book for ETH USDC in the world, basically. You're going to get the best order execution possible. You can't get a better deal. And if you want an even better deal, you can use limit orders on here and get filled with no slippage at all, and without even paying gas fees. So like it's vastly superior. And I don't know why anyone would want to remove their privacy, de-anonymize themselves, have more slippage, have more beg the exchange for getting your money back. Hey, I just did $1 million trade. Can I please, pretty please get my money back? Please, please, God. Oh, your website went down, and now I can't even get my records for accounting anymore. Oh, I guess I'm really screwed now. So like it's just vastly superior.
Forget speed versus start. I think people forget the most important thing, which is cost and speed is an inverse of safety. And by the way,
no one cares about speed.
That's what I'm saying. And just to point out one thing, how many people on this stage lost a ton of money on exchanges? Who's actually here holding money on centralized exchanges?
Just so everyone knows, Fox News Channel is currently covering us live on TV.
Oh, we're currently live on TV, are we?
If you've never used Uniswap, you need to use Uniswap. It's the future.
Sorry, they're playing us. Or...
Don't vote for Trump. So if they're listening, are we going to tell people to pull their money out of the bank and then destroy the entire system?
No, you can't. Look, man, that's what Jeff Bezos just told everyone to do. Jeff Bezos just told everyone yesterday that there's going to be a recession, and I'm pretty sure he knows. I'm pretty sure he does a lot of shipping. I think he knows what the state of the economy is. And his suggestion to businesses was, don't invest in risky things like new equipment. Save your money to survive. And that was his advice to the economy, was save your money. Now, look, Jeff Bezos might be one of the only dudes that I would say would be smarter than me. And if he's saying to save your money and to not take risks, it's probably good advice.
I don't know. It's probably better than listening to some beggar on the street. That's for sure.
Cool. So I think we've done this topic. What is there any breaking news?
So just no breaking news. But what's just fascinating is that literally Fox News. So Chet was recording it. They covered our segment yesterday on Hunter Biden. So they put us on the front page, and now they put us live on Fox.
What was the topic
they covered?
I can't believe in this space that when everyone just got wrecked on centralized finance, that anyone would be like, "Yo, the orders are faster." You're just like, dude.
But it's important. But it's important not to forget.
Let me cover it. We have completely been saying, not your keys, not your coins, take your money off exchanges.
But this guy wasn't listening. He just came in here and said the opposite.
No, I'll just say.
Hey, one guy skewed the conversation. Let's not let that take over the entire conversation.
Your complete strength is your complete weakness as well. Like you are, your delivery style gets maximum attention. But at the same time, it's completely polarizing. So it kind of turns it into a debate.
I baited him into promoting CFI. My bad.
I'm just saying that's why you always get a pushback, because at the same time
I hear you.
People.
But but Simon, I might play devil's advocate and kind of make a point on Alex's side. With Richard will hate me for this, but we can't ignore the amount of scams that happened last year in the bull market. On decentralized exchanges. Like for us, for example, we invest in projects that we know are going to list on a centralized exchange. Doesn't guarantee the project is good, but it's less likely to be a scam. People invest in a project that's verified on OpenSea because it's less likely to be a scam. So people delegate the due diligence to those centralized entities because they have a job, they have a life.
Yeah.
So I think there is a place for centralized entities that because this is what happened now is positive to
Guys,
decentralization, but
I tell you, it's real hard to talk about how good the blue chips are when the blue chips drop 85% and the scams only drop 100%. There ain't a real big difference between 85 and 100. They're kind of similar. So like it's when you're in an industry,
that is one of the
Ask
problems
that
with
to
our
Mark
industry
Zuckerberg,
is
right?
you can end up making more money out of a scam than a legitimate project, and that is I've from being involved in this industry for since 2011, what's that, 13. Sometimes it completely defies logic, and you can literally, the right decision is often the one that costs you the most amount of money.
Crypto.com's 20% of their balance sheet is SHIB. It's real. It's like, fuck.
Well, the important part
but didn't they defend
that
thing that was that? Didn't they defend that though, saying that was their user deposits? By the way, shout out to you, Richard. When I saw that, I was laughing so hard.
And Robinhood's like 50% of Robinhood's profit.
It really is true.
No, the important part about that is that
these guys do is promoting the gen coins, because people are on this market for the most part. They're on this market for speculation, and that's the truth, right? So that's just the point I'm trying to make. Ultimately, there's going to be enough shit hitting the fan, so everybody will be covered. And at some point, people are going to make the right choice and trying to find what a real alternative to money.
Well, I don't think I don't think the risk-adjusted right choice is Bitcoin. I think being down after waiting 5 years shows you that you can buy this blue chip and you're going to do worse, not better. I think the math is.
Yeah, but
I think
if you want to look where this is all going, just look at the traditional markets, which is the reality is the emotions of fear and greed that we're plagued by are the same emotions of fear and greed that plague the traditional markets. And in the end, everybody ends up, the vast majority, in the big pockets of money, those that are contributing to their pension, and then the pension, and they outsource the investment decision making. Because the reality of the world is, we're all sat here on Twitter Spaces. We love this industry, and we literally spend day in, day out researching every nook and cranny. But the vast majority of the world, this is just a mechanism. Investing is just a mechanism for trying to get ahead of inflation, and they have other things they care about, which is where the unfortunately it's just a fact of the world. It's why financial advisors exist. It's why the buy side and the sell side exist. Is because that's the vast majority of the world are not going to be day in, day out trying to figure out how to further their finances.
See, that's what's great about crypto, is that everything is just number go up. And so if everything's number go up, you do it with less negative externalities. Uniswap runs without a big building of people. It just runs. Hex runs. Bitcoin kind of runs. You need some miners. But it's less, it's better hours, it's better uptime, it's better security, it's better pseudo-anonymity, and your numbers go up more. And so it's like, if you're not in crypto, the risk-adjusted return in crypto is vastly superior than the stock market. Stocks went up threefold in 14 years. Property went up threefold in around the same time. And crypto went out like 30 million, trillion, billion X. And there's no comparison. So I would love to see crypto kill off all this stupid SoftBank and all this other crap, like people FOMO-tarting stuff that can't even go up. It's all negative externalities. And half of it scams anyway. Just put all that money out of the stock market into crypto. I mean, you've got a huge dip now.
Yeah, guys, can I just mention that there seems to be a scammer out there that says buy Agao, which is my product, AGSU. My product is not for sale for retail, guys. I'm not selling anything here. And just to let you know, we just deal with.
Have you read the library case, my friend?
What?
Have you read the library case?
What's that?
Exactly.
Yeah, cover the library case.
First of all, everybody should be very aware. First of all, did you guys see the class action against FTX US?
Nope.
A lot of fucking lawyers about to make a lot of fucking money. If you think all the money's being lost by the exchanges themselves, lawyers are going to eat the shit out of a ton of the liquidity from class actions. If one class action gets certified, consider your money going to us lawyers across the U.S.
Hold on.
And if you,
are you a lawyer? Can you? But isn't Chapter
yes,
11
yes,
bankruptcy
I'm a lawyer.
and it protects class action?
Yes, I'm a lawyer, and I hate class actions.
No, I'm saying isn't Chapter 11 bankruptcy, it protects from class actions, right?
It depends on timing, and it depends again on equity. So
yeah, but
again,
what we saw in Celsius is all the lawyers came in and said, "Hey, quick, let's do class actions," and then it filed into Chapter 11, and then everyone just wasted their money.
Is that resolved yet?
Well, no, the class actions come after it's out of protection, but they just tried to race to get all the class actions in, and then
you're familiar with fraud, right?
Oh, right. Okay. So tell us that. Is that so? Will the class
fraud pierces bankruptcy?
So if it goes into Chapter 11 and all the class actions happen,
and they can prove fraud, yes, fraud pierces bankruptcy.
But when it push it into Chapter 7 liquidation, or how does that all work?
All I'm saying is bankruptcy is equitable. So yes, how it's going to unfold, let me be very clear. None of this is legal or financial advice, and I am not an expert bankruptcy attorney, but I have dealt with many bankruptcies. And at the end of the day, everybody's going to try and bite from the bag one way or the other. I just wanted to throw out one last quick thing, which was the library case talks about it does essentially it didn't make the decision. It was a summary judgment adjudication motion that basically said even if you didn't do an ICO, that does not protect you from not being called a security. So I heard somebody saying we don't sell our tokens on exchanges or we don't sell the public. Be careful. If your coins end up on an exchange using both UBO, which is ultimate beneficial ownership, which is how a lot of these coins are going to get smacked. If you also combine that with the Ethereum jurisdiction basis that the SEC tried recently, saying that because 42 or 43% of the Ethereum validators are in the US, that could be the basis for jurisdiction. You combine that with the library case, and if your tokens touch exchanges, period, doesn't make a difference if you got an ICO, an IDO, an IEO, an STO, or anything else you want to call hiding behind your illegal securities that you didn't register, watch out.
So when new lower lows, when price dump? I want my targets to hit already. I'm sick of waiting.
That's another question by the audience. We've got an audience member, Dewey_Wester. If we calculate the shit show we just had, what is the sum of the shit show that is just about to cascade?
I think we're in the hands of lawyers at this stage, actually. I think it's the outcome of the cases. I mean, Gemini, Genesis, all those are like pretty big players. I think really the ones, I guess the only ones that you'd need to look out for.
We forgot about Plus Token. The Chinese government has like a couple 100,000.
Yeah, that was like 4 billion or something, wasn't it?
I forgot about those guys.
And there was one in India as well, a crazy one.
Bro, at some point, I think Ethereum has to decorrelate because there's too much sell pressure on Bitcoin, and there's just not as much on Ethereum. Like, I think Ethereum will dump harder, but like when it's done dumping, down to Doomville, I think it should decorrelate.
Hey,
Richard, can I ask you a question?
Just shut down withdrawals, by the way.
Gemini,
Richard, can I ask you a question?
Just sent it. I'm gonna read. Hold on, I'm gonna read it out. Chet, did you see the message? I don't know if you saw it in the group about Gemini.
Yes.
If you can review it and just confirm it and then just announce it if it's.
Let me tell you something that I can quickly confirm. I thought I was unmuted. Maybe I was talking to myself. Sorry. I haven't looked at it in the group yet, but something just crossed my wires. Is Binance's founder says he's looking into acquiring Genesis loan book. So that CZ is now looking into acquiring Genesis loan book, and that is according to Blockworks, citing a source familiar with the matter.
We literally heard the same thing a week ago, dude.
Can I rephrase that?
He doesn't have stomach hands.
No, can I rephrase that? Binance is looking to acquire Gemini's licenses, not their own book.
No, Genesis. We're talking about Genesis, not Gemini.
Yeah.
Wolf?
Yeah, I just wanted to say, Simon, I'm not sure if he was talking about this class action, but the one that I saw that was put in today was against SBF himself, not against FTX, and named Larry David, Tom Brady, Steph Curry, etc., which I think is largely outside of the bankruptcy protection.
So have we got any speculation on what SBF's net worth would be at the moment?
A lot more than zero.
Didn't they say 1 billion?
Well, the vast majority of his net worth was, well, who knows, but that was meant to be the value of his company and his tokens. And so the question is, how much?
In the Bahamas is currently for sale for 40 million. So there you go.
So same as easy?
You're looking at buying it, Kim?
I can't travel to the Bahamas,
So
but
people tried to come after the CEO of Voyager, and I'm sure they'll do the same with Celsius. But they determined that his net worth wasn't worth the legal fees after this case.
Right,
but
they could have gone after him and basically settled as part of the UCC decision to expedite the process to not go after him. But if they find that he has more assets or that he's lying about them down the road, he's still open to lawsuits.
Yeah. So Shingo, the guy that was really on top of this, he said that a lot of his wealth was siphoned off into a trust structure, and it wasn't his personal net worth, and that actually they started looking at. So when FTX tried to buy Voyager, the holdup. Now this is really interesting thinking about it now. The holdup was because they were trying to the state regulators were disputing the fact that they were trying to get releases. So the purpose of Chapter 11 bankruptcy is for to try and get, Kirkland and Ellis would try and get as many releases as possible, which is why it often ends up in an auction, because you can negotiate into the purchase agreement for the assets that you will waive some of the things like the criminality, well, not criminality, but some of the legal issues. And the hold up on the Voyager case was because the state regulators were objecting, and they wanted to come after the various other things, the criminality side of that. So there was a big negotiation between FTX and Voyager in terms of what releases can you have, what can't you have, and they wanted the right to come after the founder. So that actually caused a delay, and in the delay, this process, FTX actually blew up before it actually. Well, they signed the agreement, so there's some recourse there. But good luck trying to get that recourse. So they're putting it back into the auction process now.
Yeah, but Simon, I think the silver lining there, and I think a lot of people who are Voyager creditors initially were really upset that FTX blew up and that deal wasn't there. But imagine if that delay had not happened, FTX had done the deal earlier, and Voyager had already sent their assets to FTX.
Absolutely,
that was the worst case scenario for Voyager creditors. So actually, as painful as it is to have the timeline, I think, reset for Voyager creditors, they should breathe a massive sigh of relief that this just didn't fall into the abyss of FTX's assets.
Exactly. Imagine if everyone suddenly jumped from one Chapter 11 to this Chapter 11 disaster. And that just shows you SBF knew what was happening, and yet he was still willing to take 1 million people. He was willing to use creative financing, probably leveraged against the token that he printed, in order to bring 1 million victims into his scheme. And then they would have all been caught up in this process, all because he was trying to play creative finance from his bad debts, leveraged upon the collateral of an illiquid, illegal security called FTT.
Simon, quick question. You're calling it creative financing. Is that being generous, or is it actually illegal financing?
Yeah, it's a fraud, basically.
Fraud. It's fraud.
If
it was so client money. So but the FTX.com had client money as a regulated institution. If you touch client money, then that is certainly a fraud and criminal case at that stage.
Got another question here.
I'm not a lawyer, not legal advice as well.
It goes back to the question that to the topic we're discussing. If I trust centralized exchanges more than I trust myself to keep my keys secure, that's by hustle life only. What do you recommend in terms of the safest centralized exchange in the market now? And he's not alone. You remember when FTX collapsed, we saw a few exchanges, including Binance, get a net inflow. So they had more money come in after the FTX collapse, at least in a few days after the collapse.
Yeah.
So for anyone that doesn't want to use a DEX, doesn't trust doesn't trust having the private keys of a wallet, what centralized exchanges would you recommend, if any?
Well, nobody can recommend an exchange in this side, and nobody should. I wouldn't recommend anyone.
Even if you go to a US, even if you go to a US regulated exchange like Kraken or Coinbase, you still wouldn't recommend those.
I have a question for the room.
The thing is, nobody can recommend anything at this point.
Here's
You recommend something, and then the thing goes down.
So just some news to report,
and
just some news to report for everyone really quickly. Sorry, we do have some reports that there's issues with Gemini overall. Apparently, it looks like it could be an AWS server issue. It's not certain yet. And the official statement that's coming out of Gemini right now is that they're investigating reports of potential service disruptions, but they state that all customer accounts and funds remain completely secure. But that's just
we've heard this before
right now on the situation.
We've heard blaming AWS before.
Real quick though, no, because Mario had a good question, and there's a lot of people in the room that want to know, and I want to just add on to this because I have this question too, is because I don't recommend anyone to any centralized exchanges at all.
I got the balls to do it.
One second. Just add on. But what about like services like Cash App, Venmo, PayPal, where you can buy crypto and custody? Are those trusted? I'm really asking. I've never bought them.
They're no different, Ninja.
Yeah, let me try and take it. So and come with something.
By the way, and afterwards, Richard, did you say you can? I'll let Simon go, and then Richard.
Look. Listen, I got the balls to do it.
Oh, sorry, Simon. I'll let you go.
Limit your risk to any of these centralized exchanges by going in with multiple transactions. You send them 1/10 of what you want to put in. You withdraw it. You send them the next 10th. You withdraw it. You send them the next 10th. You withdraw it. They can only screw you for the last 10th. That 10x reduces your risk. Thank you, Richard. You're a genius. True.
It's the word. It's the word exchange.
Before, guys, is when you deal with exchanges, that means you want to transact. So what I would recommend people is the vast majority of your wealth, and I'm talking about treasury, you want to keep it in a multi-sig or in a decentralized or in your own keys.
But why?
Let me answer the question.
How are you going to buy the stuff to put in your multi-sig unless you took fiat from the real world, bro?
But then what I'm saying is, when it comes to exchanges, they have a purpose, right? So when it comes to exchanges, as you said, there is off-ramp and all of that stuff and on-ramp. When it comes to exchanges,
listen, with all due respect, though, there's a whole bunch of people in the room that then Mario asked like a very valid question.
Let me just answer it. Kraken.com, okay? They support anonymity. They have Monero. Still treat them as though they're risky. Do not ever leave money there. You want your money and your crypto to spend the least number of hours possible there. And so when I say you could split your transaction by 10-fold, you could really you could split it up 100-fold if you want and reduce your risk 100-fold. So if you're going from fiat to crypto, spread your transaction. Now just make sure that you don't break the law, because structuring is a money laundering law that you can break. Go Google what structuring is. So if your intent is to stay under some limit to not get caught, that could be illegal. If your intent is that the exchange doesn't screw you, that's probably okay. Check with your lawyer. I'm not a lawyer. So
yeah, again, not financial advice.
let me try and answer the question, because
then you
basically
point your fingers towards somewhere, and then if they go bust, then you don't want to be liable. Yeah.
So
I'm here to replace all these guys, but you still have to take your money from your job and get it into crypto somehow. And what are your options? 10% fee at an ATM? Meet some guy in a hallway and he stabs you and takes your money, or take a little bit of risk and send it to Kraken.com. I think that sounds like a better deal. I feel okay with it.
Exactly. Yeah. So let me just try and answer it, because like we've covered it a lot of times, but sometimes people are joining at different stages, so we have to repeat. But